Bitcoin is facing a 5% dip right now, but to the rest of the crypto market, it might as well be 20%. In this video, guys, we're going to go over a couple reasons why we believe that this is occurring. And also, we're going to highlight a price target, a short term price target that we have been eyeing in the form of 50K, guys, because we've been talking about that for the last couple of weeks that I felt we had to come back down to 50K before the run up of the century. And with this recent dip, that's actually what just happened, guys. Now, at time of recording, we're still sitting 5% down at 53,000. So there has been a bit of a recovery since we touched the 20-day moving average at 51,000. But if you go to the intraday, guys, that this wick here, and we're on the 4 hourly. Let me see if I can get that to reset. Yes, on the 4 hourly, you can see we came down even further. Okay, so is this as close as to 50,000 that we'll get? We are still unsure. However, the closer we are getting to that moving average, the better position that it is for us, guys, simply. So you can see here by this green line, and I'm going to try to expand on this a little bit. But I have placed this line here, guys, because it's kind of charting our path. Now, we've been using these weekly charts since around September, and we watched something similar occur back then, guys, where we were watching it play out mostly on the RSI. Let me move that out a little bit so we can see here. But in September, guys, we watched this cascade down, touch the moving average, and then the rebound started. Now, what's happening right now is much the same. So that is why, and we'll place that right back where it was. Yeah, right here. That is why I traced this green line the way I traced it. Okay, with the exception of this little section here. But the focus is that we have now wicked to that 50K level and we've touched the moving average. So if things were to repeat like they did in September, guys, then this is it. This could definitely be the last tip that we needed, the last tipping point that we needed to be on before the, like I said, run up of the century. Now, what's interesting is that the headlines are starting to resemble that as well, guys. This is courtesy of Rect Capital, which is a very reputable analytics firm, analytics partner, data news source in the space. But they're quoted as saying in September, we retraced 25%. This is when investors got extremely fearful. Then BTC reversed to new all-time highs. And yes, that is true, guys. If we go back and we look at what happened in September, we came all the way down to 39,000 from pretty much where we are now, just about where we are now, guys. So after that, we had that massive run up to new all-time highs, and then we started to move back down. So what we're seeing, though, is a number of relationships playing out. In that run up, that September run up, it stopped because we made contact with that top band. Not, of course, in real life, but from a technical perspective, that's what played out. So we have been moving sideways ever since. And then we've had some FUD come into the space and bring us down a bit. And then, of course, the news of the variant is, of course, having an impact on the markets as well, guys. So that is another reason why things are looking the way they are. On the upside, though, even though this is an unfortunate circumstance, it brought us to where we need to be. It brought us right where we need to be for that 50K rule to come into effect. So with this being Friday and with us being so close to the close of this weekly candle, guys, I can wholly expect the rest of the night to still be in the red and maybe even tomorrow. But Sunday evening at 7:30 p.m., guys, keep a sharp eye on these charts because that is when it will change, if it will change. I think this Sunday is one of the most important days of the calendar year when it comes to Bitcoin, guys, because if we get to Sunday and we're still playing above this 50K 51 region, and we fall anywhere beneath that, then we're going to have a whole new discussion Monday morning. Now, something else that I noticed that actually goes in our favor, guys, we've been looking on the monthly and tracing the behavior of these Bollinger Bands here. That's the blue line right there at the top. Now, last week, I believe I told you guys we had started to creep up into the mid 80s, 83, 84. Now this band has extended open to 89,000, guys. 89,000. So that means that that is now how much more room we have to grow. Okay. So we are now in December. It's only been 3 days. This, you see where the green line is. This green line, it could still play out if in the first 3 days of the week, we recover and we come back up to 57, 58. We need to get to 58 to be out of the red territory. If we get back up to 58, guys, by next Sunday, I believe that the rocket now has fuel and we are going to go towards the top. Okay. But what we're seeing right now, guys, is really fear. It's a whole lot of fear in the markets. The geopolitical landscape is really unstable right now. So the markets are responding. This is still a young space. So these things happen. But that's why I like to combine the technical with the fundamental, because on the technical side, we saw this coming. We saw this coming. So I am still, of course, always positive on the future. But as far as price goes, still just being patient right now. Still just being patient, guys. We only have about 28 days left. And it's funny that that number pops up because in October, we made a about 50% increase, 50% rally in October in 28 days. So it is all likely that once this final, well, we won't say final, but once this short-term period of come down correction is over and we get to Sunday evening and we go up the other way, then the following 28 days could be the most interesting 28 days we've ever seen, because the next target, like the bands are showing us, is nearly $100,000, 90,000. Once we get closer to 87, 88, 89, guys, everybody's going to say 100K. The market is going to push us to 100K. The FOMO is going to push us to 100K. The media will push us to 100K. All we need to do is get to 90. All right. We just need to get close enough to 90. And then this type of situation plays out. And you can see how these candles are riding that line and pushing it up even further. That's a bull run, ladies and gentlemen. That's a bull run. And then you'll notice that in 2020, November was all right. It was okay. It was exciting. But December is when it really happened. It's when it really got crazy, guys. And then January, February, March, so forth and so on. But as far as where we are now, guys, it is really resembling that moment in September where we made contact with that moving average. Are we going to touch it? And is it going to support us the same way that it did then? The technicals, to me, guys, they look like yes. They look like a yes. So temporarily, short term, yeah, it's gonna be red just a little bit longer, guys. And on the weekly, the target that we're getting now is 76,000. 76,000 is the target. So 2 days, 3 hours left in this candle. That would mean that the following candle going into next week should start to put us on an upward trajectory, guys. Okay. And that next upwards move isn't going to be stopped until around 70, 75,000. So, of course, can't be 100% on these things, guys. That's why we're constantly learning and constantly trying to evolve. But from what I'm seeing, yes, short term, we're in the red territory. But from a technical perspective, if we come down to this moving average, we're going to play on this moving average because we're so close and the market is very fearful. However, that 50K rule then comes into effect, guys, because from 50K, the moving average is now at 50K. That serves as a support. From 50K, we have the room to repeat what we did in September. Okay. And that would perfectly line up with what occurred in 2020. Get that back there. That would perfectly lined up with what occurred in 2020, guys. And we'll just be on the same pattern again and on the monthly. That's why I like to look at the wider time frames, guys. You can see it happen here. April 1st of 2021, we maxed out right there at the top of that band, 64K, came back down. And we've just been playing out a repeat of the narrative. So, guys, I hope I explained that to you, gave you a little bit of clarity as we go into the weekend. I was sitting in front of my computer as it started to unfold. And of course, one of you guys, the network, we reached out to each other. My brother Marcus was like, hey, what's going on, man? What's going on? So we was all thinking together, guys, like minds, we make money like that. So, with all that being said, though, guys, I'm gonna leave you. Hope you have a great weekend. And the Africa video was supposed to come out later today, but I rescheduled it for tomorrow. So, with that being said, make sure you tune in for that, guys. And of course, if you found value in this, hit the like, subscribe, ring the notification bell so that way you don't miss another one. And you know where to reach me: social medias, email, comment section. You know how it is, guys. But most importantly, have a great weekend. Have a prosperous weekend. And we making this money. I'll see y'all in the next one.